Good morning, friends. So today we are going to see the chapter national income. Now, first of all, before going to the class, if you see the previous year UPSC questions, there is not much questions which they have asked directly from national income. They have not asked about the formula, what is the formula for gross national income, GDP or disposable income, or things like that. But they have asked a few questions in few years. But if we know overall what is national income, what is the difference between GDP and GNP, what is the through which and all ways we can calculate national income, that is through expenditure method, income method, production method. So all these things, basics which we know, then we would be able to answer the questions the UPSC has asked. But as such, they have not asked any question on the formula or things like that. So let's get into the class. First of all, what is national income? Now, national income is the total amount of goods and services produced within the nation during the given period, say 1 year. So within 1 year, how much the cost of goods and services that is produced in the country, that is in general national income. Now, this is a very common or general definition for national income. How, through which and all ways we can calculate national income? For calculation of national income, there are many indicators such as GDP, GNP, then national income. Then there is other concepts related to the same, like disposable income, personal income. All these things we will be looking into detail now. So first, let's see gross domestic product, that is GDP. As soon as we saw the chapter name national income, this would be which came to our mind. So GDP is what is to be concentrated in GDP is domestic territory. This term, this word is very important in GDP, because GDP is the monetary value of all the finished goods. That also you have to underline. It is the finished goods. The intermediary goods will be there, but that's the value of those goods will not be considered while calculation for GDP. So it is the monetary value of all the finished goods and services produced within a domestic territory in a specific time period. This is also very important. Specific time period, normally 1 year. So that is, as evident, it is tied to a specific territory, a country's border, irrespective of the person producing it. This is another thing that is here. Why this word, that is irrespective of the person producing it, is been stressed, is that if you see GNP, there is gross national product, that we will see in the next slide. There it is irrelevant. So here the point which we need to concentrate on GDP is that it is the domestic territory within India, within Indian borders, the value of the goods and services, finished goods and services, how much it is, that when we calculate we get GDP. In that, within Indian territory, there might be a foreigner working in an Indian company, or a foreign person working or foreign businessman doing business in India. So all this we will calculate, because the concept here is that within Indian territory. So because of that territorial concept, irrespective of the person's nationality, the value of the goods or services the person produces will be calculated or used in calculation of GDP, if that production of goods or services happen within Indian territory. Now, for example, let's take that there is an economy, we are producing 10 cars. Now, the manufacturer purchases all the components like tire, glass, the wind glasses, brakes, everything for 40 rupees. Then he pays rupees 30. That is rent for the place where the car is made. That place is rented, and let's take the rent is 30 rupees, and he pays the labor 10 rupees. The labor cost is 10 rupees. So how much is it? And he finally sells the car at 100. Now the cost is around coming around 80 rupees, so 20 rupees he would for his profit he would add 20 rupees in addition to the input cost, and he would sell it at 100 rupees. Now when we calculate GDP, we will not take separately this the value of tire. The tire has been produced and glass, all this has been produced and it is 40 rupees. No, we will not take the account of those products, because we saw here it is the monetary value of the finished good. What is the finished good here? It is the car. So only the car's final value, for how much the car has been sold, that only will be taken into consideration. And in fact within this value, the other things, that is the value of the tire and glass and rent, labor, all the things will be included in final cost of the car. So that is another thing which we need to remember. Only the final goods value is taken, that is only the car's value is taken, and in that the other values would be included, and it is not that the separately for tire, glass and all will not take value. So finished goods, that is what is in by finished goods. Then domestic territory I explained, then again irrespective of any person, that also I have explained. So these are the three things which you need to concentrate while when you hear the word GDP. These things should come to your mind, and in fact UPSC asks questions to test that whether you know that GDP means within domestic territory, GDP means finished goods only, like that. It is in that way UPSC tests your knowledge in prelims. So this is a simple circular flow of money and method of calculating national income. Now particularly there is no specific reason why I have included this diagram. It is just to have an overall idea. It is not that you would be able to get, or UPSC asks directly questions from this diagram. No, it is to have an overall understanding of how the economy works, so that when we say the value of total value of the finished goods, we would be able to imagine how it is. So to have an overall idea on how the economy functions, I have added this diagram. So here you can see that there are household is there, then government is there, firm is there, that is corporates are there, the company is there. Now how the flow of money is happening? Let's say from firms, that is company, who is working in the company? The people who is in household, the people is working in company. So the company has to pay wages, they have to pay. If people are part of, they have bonds or shares in it, they have to pay dividends. If they have taken loan from the people in the form of debentures, they have to pay interest, profits and rents. If the company is renting a place which is owned by some private individual, they have to pay rent. So the company will pay all these, that is wages, dividends, interest, profits and rents to the house, that the people, individuals, let's take that as households. Now what the people will do? They will purchase the goods. This money which the firm is paying to the people for their labor or for their in the form of rent or profits, the money what they will do, they will spend on the products which is produced by the company. So it is a circular way. In one hand the company gives money to the people, and through other hand the people spend that money on the products which is produced by the company. Similarly, if you go deeper, what will happen is that the money which the household is getting from the company, they pay a part of it in the form of taxes, and then government will also purchase from the firms, right? So from that, government will the tax which the government is getting, that money they will spend on government purchases. Then again what the firms will do? Firms will pay the taxes to the government. So from then also the taxes the government is getting, it will spend on social infrastructure or social security schemes or social welfare schemes, they will spend on the people. So the flow of income is a circular format. You can see that from one hand the money is transferring to another hand, from there it is money transferring to another hand, and again coming back to the same person. So the income or money flow happens in a circular manner. Now, concept of national income. So we have seen GDP is particularly there. So GDP we can simply elaborately we saw there. So here in a simple way we can say that GDP is prices of goods or services into quantity of goods and services. How much quantity of goods and services is being produced? Let's say 10 cars are being produced. So 10 cars, price of one car is 100 rupees. So 10 car into 100. So what is the 1000 rupees is the GDP. So it is simplified formula for GDP. Now UPSC does not ask a formula, or in fact they have not asked formulas till now. So you don't need to worry about that. Now again, GDP is made up of 4 components. These 4 components we saw it. The consumption is what in the diagram we saw. Consumption, that is the household will purchase from the firm. This is consumption. This part is consumption. So consumption is there. Then investment. What is investment? The individuals will invest in the private firms. Then government expenditure we saw. The in one hand the firm is giving money to the government in the form of taxes, and then in the other hand the government is spending or purchasing the products and giving the money backs to the corporates or the firms. So that is government expenditure. Then net foreign exports of the country, that is exports minus imports. That is in this diagram we can say the household here, imports and exports, through imports and exports into one country, the products from rest of the world will come into, and through imports and through export from the country, the goods and services will reach the rest of the world. So we saw that the GDP is the value of the final goods and services produced within the country. So for that we need to reduce imports from exports. So that is X minus M. Now next is gross national product. Now GNP, as I have mentioned earlier, the peculiar feature of GNP is that this is the market value of final goods and services. Here also again final goods and services produced in an year by residents of the country. Here it is the point, it is residents of the country within domestic territory as well as abroad. In GDP what we saw, it is only within the domestic territory, and we saw that irrespective of the nationality of the person who is producing it. But in GNP what is to be concentrated or what is to be stressed here is it is by the residents of the country within the domestic territory. It can be the residents of the country, they can be either living in India or they can be from living abroad. So the value of the products of Indians, to put it in a simple word, GNP is what is the total monetary value of final goods and services produced by Indians all over the world, whether they are Indians are working in India or they are working abroad. All their services and goods and services which they produce, their monetary values added, and we get gross national product, GNP. So again GNP you can GNP the formula we can write as GDP plus NFIA, that is net factor income from abroad. So GDP we saw what is the formula for GDP, consumption plus investment plus government expenditure, and export minus imports, plus net factor income from abroad means net factor of income from abroad means what is the